Making sense of the tariffs is pretty hard. I think there's all sorts of speculation on what might be happening. Is it actually just a play to sort of, shift things away from China? Is it actually a play to manage deficit control? All of that seems reasonable. Is it also just some chaos theory at play? Potentially. I think with respect to AI, what I'm most excited about right now is that it actually probably presents AI's moment to shine. Because if you wonder how hard things could get without AI vis-a-vis automation, like what would happen in a world where you can't just employ a bunch of people overnight, AI presents this alternative proposal, which is if everything actually has to start moving from a manufacturing standpoint, from a distribution standpoint, then we actually finally do have the technology that could lead to a deflationary event despite all of these new requirements on trade. Now, that's my optimistic view, but I really do think that what we're going to see now is actually people forced to explore what it would look like to automate a ton of things that we'd previously had the luxury of saying, we probably don't need to automate because they're really cheap anyways.
It's very interesting. You're looking at it with a glass half full perspective here, because Wall Street didn't enjoy the news whatsoever, and we actually saw, players like Nvidia and other companies being significantly impacted during yesterday's trade. So I was just wondering whether, at least in the short term, there could be implications here for the way that companies can actually invest more in AI. Could that be curbed as a result of these economic pressures?
Maybe. It doesn't seem to me that of the things you could stop investing in, AI doesn't seem like it would be very high on the list of things you'd want to stop investing in. If I were a large industrial manufacturer right now, I'd be looking at ways, if I had to change manufacturing location, to lower the cost of that manufacturing, especially in a climate where there's already probably labor scarcity or excessive labor cost. Now, the market's response is not, it's for someone else to opine on. I'm also not sure that the market responds rationally always to these sort of events. We saw with the DeepSeek news, the capitulation was just a fear of uncertainty, when in fact, from my vantage point, it was only net good for AI that we were actually moving the industry forward on a scientific basis. So, do these things tend to rebound? Yes. But at the same time, again, what I would point to is if you right now want to figure out a better way to produce a good or provide a service, AI probably presents an alternative that is better than, anything else.
Let's talk about OpenAI. Their recently market valuation of $300 billion after a new round of funding. I was just wondering whether this is too much, given all of the developments we're watching from China, for instance, with DeepSeek. Is OpenAI overvalued?
Well, so the thing I would remind everyone, especially as you mentioned DeepSeek, what's impressive about DeepSeek is, in my opinion, R1, the model. And anytime you talk about DeepSeek, and frankly, anytime you talk about any AI company, it's important to separate the research that company does, so the models that it produces, from the applications that it builds. And this is an important distinction that is not made enough, or nearly enough, certainly, in Wall Street and other places, because the research itself, you can start to argue, may commoditize. Now, OpenAI has an incredible advantage on frontier models. It has proven that. It will continue to produce frontier models. Whether that frontier model has a material advantage in the market for long remains to be seen. And obviously, DeepSeek proved that you could do more with less.
Exactly.
But the application layer is still exceptionally valuable. And if you want to talk about an incredible application, it is ChatGPT. And so pointing at DeepSeek and saying, well, look how easy it is to build a state-of-the-art model. One, sure, although the frontier will continue to move. And two, ChatGPT is the most popular consumer product by sort of any measure of all time. And that's very valuable. And the market has basically proven to value rapid, viral growth among a lot of other things, and the network effects that we're starting to see are profound. So I think you can make the argument the company is very undervalued. At the same time, I do think the market has to start talking very separately from the model research itself and the applications that the models power, and who owns those applications, where they live, how sticky they are, how critical they are to workflows.